We saw a showdown in Kuwait. A number of OPEC producers met to measure the success thus far of the supply agreement. Pete McGuire from XM.com, Chief Executive, was live at our Sydney CBD studio. Pete, what's the broad outcome of that Kuwaiti get-together?
Well, good afternoon, Carson. I think moving forward, there's no doubt that they have got very much the 25th of May as their radar line. They're taking on board what happens over the next 2 months. Price is certainly a major concern to them, having seen that large washout since really about 2 odd weeks ago, and taken on board that push forward. If you do see prices go softer from here, then there's no doubt that they'll probably have to cut again and try and get prices back up. There are many different angles out there, but there's certainly a great amount of concern as far as those US inventories and the record numbers that they're sitting at.
Meanwhile, the hedges, their mindset would tend to suggest what of those two outcomes?
Well, first off, you've got to observe what they've done in the last matter of weeks. They've really cut long positions. They're down about 250 million barrels from a record high that they had around about the 21st of February. So we're 5 weeks into that cycle, and they've certainly trimmed positions. But what's important, Carson, is they've really layered up bearish positions. Now, it's $47, $48 is that handle as far as WTI. And the way it's moving at the moment, softness as far as that US dollar, you could see a 46 or a 45 sometime before Easter.
Yeah, it's almost a kind of a feeding on itself position, I mean, and a forced selling scenario then emerges.
Well, well, that's right. And I mean, think of this. We've spoken about it for quite a long period of time as far as the bearish positions and those cycles that the hedge funds and money managers enter. And this we've just started really the 6th bearish cycle since the start of 2015. So the market is very, it takes a lot of movement from the hedgies and the money managers, because they really do control a large portion, you know, futures and options. And at the present time, they're stacking positions to the shorts, and it's going to be interesting. The longs and those bullish positions, Carson, will certainly have to be liquidated. If prices hit that 45 or 46, they'll be squeezed.
Baker Hughes, 652. The combined oil and gas is at now 809. It rose 20 over the course of the week. So oil rose the most. But you just seen, you know, they went from 631 to 652 for oil only.
Right.
And I think that's the...
That's 3%, Mark.
That's the problem, right? It's 3.3%. That's the problem. You know, make America great, put America first, means that OPEC, I don't know if they can spell it. You know, I don't know where they're not party to any conversation. And certainly if Russia says we're trying to change the price of oil, they'd say, well, assume $40, because that's what Russia's budget said that they will expect oil to be at $40.
So anything above that's money for jam?
Well, that doesn't mean they're making money. It's just how they're trying to craft their budget. They've just dropped their interest rate settings because of where they see inflation in Russia.
And there are protests on the street, because here we are talking even Venezuela and a flare-up potentially on geopolitics. Pete, heaven forbid, Vladimir is going to make another run for, you know, the Kremlin.
Absolutely.
Now, in that regard, do we see the last king of Zaire, that sort of
do a return run?
Well, yeah, I mean, has it got strains of the last king of Zaire, where basically there'll be something that will come into play to dethrone him? Well,
when you're looking at a couple of years back, maybe, you know, 5 or 7 years, you may have thought of Medvedev having a run, but Putin's popularity, Carson, is greater than 60%. As you know, sometimes he touches 80% and 90%. So at the present, he's still got the momentum. The election's a bit over a year away, that's my understanding. And in the short term, he's got a couple of issues that he's got to run through as far as what's happening as far as energy prices, how the Russian economy is looking later on this year. And if things work to his favour, which they traditionally do, being one of the wealthiest men in the world, then you may see a return of orthodoxy. He wants the old Russia to remain, and he's got a strong groundswell of popularity.
These street protests, though, they looked ugly, and I know it only takes a minority to basically give a false impression, but is there a possibility? Do you
I can give you some anecdotal commentary.
Yeah.
I have a friend who's in Russia at the moment.
Right.
They might be on a plane coming back now.
Right.
And we were talking to them over the weekend, and they were saying it is remarkable that no one smiles. Like, it is bleak.
Oh, they've always been like that. They've always been like
But that's the point.
Yeah.
That's what vodka's for, mate.
That's right. That's the point I'm trying to make. It's not as if the protest is something that you go, OK, I'm worried about all the people. And it's about the political engagement. So if you think about Obama getting all those people out to vote, I don't know that I think you need to look at it differently in Russia in saying, who's going to make all that effort to unseat the president?
Right.
You know, that's not their game. That's not what they're on about. So I just, it's the same as China. You just got to have a really good reason. China, it might be around pollution. Is Russia around the economy? It's not obvious to me that there's enough there to unseat anyone.
Okay. Well, meanwhile, moving beyond all of that, let's go into the softs, can we?
Yeah, sure.
Thinking about this one, go to the Chicago Board of Trade and talk about grains and oilseeds. What will be you talked about the hedges in crude. What will be the dominant thinking for these players in these soft commodities at the moment?
You're running across us again to hedgies and the money managers, Carson. They've been short wheat, soy and corn, and that's pushing the market naturally lower. So they're entering markets, they're long gold, but they're short energy, short grains, and they see, further downside in those markets. So, people have got to understand that you've got the producers, but then you've got the speculators on the other side that take massive positions and can move markets, and the hedgies are very much looking for opportunity, and at the present time they're seeing, softness or bearish positions in those soft commodities.
It's incredible to think that they have free rein when what's at stake ultimately is the quest on inflation for central banks, and they don't hold sway in these markets.
If you look at the volume in corn over the last, since February, it's massive volume, Pete. I mean,
absolutely, Mark.
And they're getting absolutely belted. Price going lower.
And they have absolutely no intention of taking ownership of it, do they?
No, it's a cash supply. So it's what they'll do is, I guess,
it could be called rubies. It could be called corn today, rubies tomorrow.
They'll take this chart to the president, and he'll come back and he'll tweet about it.
That's true.
It's a question of how long they stay short for.
Well, that's right. And I mean, as you know, markets, once you you're in that short phase and they stack positions to the downside, then all of a sudden there can be a squeeze on, you can have supply disruptions or something happens over that northern hemisphere summer. So, markets can quickly turn. So at the present time, they're bearish, and that's what the momentum is to push it softer.
Peter, you see us out. Thank you so much. Appreciate it, and all the very best.
Thank
Peter
you.
McGuire there from XM.com.